Have you ever wondered how insurance companies calculate their rates? In our last video, we laid out a definitive guide to auto insurance premiums in Canada. We explained in detail how insurance companies calculate your auto insurance premium and gave you some great tips on how you can save money on your auto insurance. So if you didn't check it out, we'll throw a link in the description below. Make sure to give it a watch because there is a ton of valuable information in there. In this week's video, we're hopping over to the other side of personal lines insurance and laying out the Big's definitive guide to home insurance premiums. Just like in our auto insurance video, we'll explain why your home insurance costs what it does, while also providing you with tips to help save some money. But before we start, we wanted to let you know that here at The Big, we are on a mission to make sure that all Canadians are well-informed buyers of insurance. So if you have any questions, please don't hesitate. Drop them in the comments below and we'll be happy to answer them either directly in the comment section or in future videos and blog posts. And while you're at it, don't forget to like this video and follow us on social media for more great insurance-related content and all things Billyard Insurance Group. All right, let's get into it. To calculate your home insurance premium, insurance companies will consider a variety of factors to estimate how likely you are to make a claim and then how much that claim will likely cost. Let's take a look at some of the more common factors. So different structures will have different rates. The risk associated with a standalone home might be slightly different than a split-level townhouse, and this will be reflected in your premium. The size of your home gives insurance companies an idea of how much it will cost to repair in the event of a claim. The larger the home is, the more materials and labor are required to rebuild or repair said home, ultimately leading to higher premiums. Different areas will have different risks associated with them. Insurance companies will use your postal code to look at claims data in your area and find out which claims are happening and the frequency that they're happening at. For example, you may live in an area that is more prone to flooding, or perhaps there's higher rates of crime in your neighborhood. Companies are going to look at this and calculate their rates accordingly. They will also want to know the distance between your home and the closest fire station and fire hydrant. The closer you are, the easier it is to save more of your property if a fire does occur, so the further you are away from them, the higher your premium is going to be. Newer homes will typically be cheaper to insure when compared to older ones. As homes age, their component parts weather and break down, ultimately leading to issues like cracked foundations, leaky roofs, faulty pipes, and older wiring. When your house breaks down like this, the chances of it being damaged by water or fire increases significantly. Be sure to update these components when you can if you want to protect your home and keep the cost of premiums down. If your home is heated using oil or a wood stove, it will be more costly to insure compared to electric and gas furnaces. Oil tanks run the risk of leaking, causing significant damages to your property and surrounding area. And wood stoves will increase the risk of a house fire. More risk ultimately means higher premiums. Finished basements cost more to insure than unfinished ones. Typically, they contain more valuable items than their unfinished counterparts and are also built using more costly materials. Older wiring or fuses instead of breakers increases the likelihood of your house catching fire, ultimately increasing your premium. Switching from fuses to breakers and keeping your wiring updated is going to keep the cost of your premium down. Having security systems in place like smoke alarms and flood detectors, centrally monitoring security, or video surveillance will contribute towards lowering the cost of your insurance. Consider installing any of these items for potential discounts and lower premium. Your ability to pay down debt consistently is one of the best indicators of a low-risk policyholder. While you don't have to provide your credit score if you don't want to, it will likely lower your rates so long as you're in good standing. Just another reason to keep in good credit standing: lower insurance premiums. Typically, the more coverage and limits you purchase, the higher your premium will be. As we mentioned in our last video, it really is best to have a conversation with your broker when making decisions regarding your coverage and limits, since you could potentially be underinsuring yourself if you're sacrificing coverage in order to save some money. It really is best to have a conversation with your broker when making decisions regarding your coverage and limits, since you could potentially be underinsuring yourself if you're sacrificing coverage in order to save some money. As I also mentioned in our last video, if you really want to save money on insurance, consider shopping with a broker like Big. Our professional guidance will help you get the best price on your insurance while also maintaining proper coverage. And really, what do you have to lose? A no obligations quote will only take 5 minutes and could save you a ton of money. Hit up thebig.ca and find a branch office near you. As you can see, quite a bit of factors determine your home insurance premiums. If you have any questions about your home insurance premium that we didn't address, let us know in the comments below. As always, for more information on home premiums and all things insurance, check out our blog or connect with a Big broker. We're here to be your trusted insurance advisors.